Agnico could join the 1 million ounce asset owner club. Agnico Eagle Mines completed an updated reserve and resource estimate and life of mine plan for its Detour Lake Mine in Ontario in Canada. The PEA contemplates an underground mine added to the open pit to potentially increase production by 300,000 ounces a year to more than 1 million ounces a year. Joining me to discuss this is Ammar Al-Joundi, President and CEO of Agnico Eagle Mines. Ammar, welcome back to Kitco.
Thanks, Paul. It's great to be back.
Thank you. 1 million ounces a year potential. Wow. How would you get to 1 million ounces per year at Detour Lake?
Well, Detour Lake is really an absolute world-class mine, an absolute world-class deposit. As it stands, the mine life goes out past 2050, and it's still open as it's dipping to the west. So for us to get to over 1 million ounces, right now we're about 700,000 ounces a year. The idea, Paul, is to combine not just the open pit mine, but combine it with an underground mine as well. And that would bring the mine to over 1 million ounces for roughly the next 14 or 15 years. And this is just a snapshot in time. As I mentioned, the ore body is still open. So we think this could be a plus million ounce a year mine for decades to come in the best jurisdiction in the world.
And what to build out the underground mine, will there be big infrastructure changes that you need to put in, things of that nature? And what would the potential sort of capital cost of doing that be?
Well, that's a great question, and that's a question that really we don't address enough in this industry, because what we're really trying to do is not produce ounces. What we're really trying to do is give a good return for our shareholders, which means not just how many ounces you're producing, but how much capital you spend to produce them, how much cost you spend to produce them. So one of the beautiful things about this, again, over 1 million ounces a year, again, great jurisdiction, multi-decade mine life. But to get there, Paul, what really differentiates this mine versus a lot of our peers is it really takes very little additional infrastructure. The mill is there, the tailings are there, the people are there, our relationships are there, the power is there. This is an operating large open pit mine. And what we're doing is we're going to build a ramp to access the underground mine. There'll be a paste plant, maybe some service buildings, but that's about it. And building ramps, we do that every single day. This is something we know how to do. The return on this, the return on capital at current prices is about 25% return on capital. To put that into perspective, that means it pays for itself in about 2 years.
I mean, that's quite incredible. And you've sort of touched on my next question, actually. So I was going to ask you, imagine you're not just going to go big to go big. So I wanted to ask you about the potential economics. So an IRR of 25%, that's quite up there, isn't it? Particularly in terms of large mining operations.
Oh, it's fantastic. And it's not just the return, it's the risk-adjusted return. So, a 25% IRR is fantastic, but if you're going to a brand new country in a difficult area, in a difficult environment with difficult technology, that's one thing. In this case, this is in Ontario. We've been in the Abitibi for 67 years. This mine has been operating for over a decade. It's called multiple decades. So this is not just an excellent return on capital. More importantly, it's an excellent risk-adjusted return on capital.
Now, this would put Detour Lake into a very select group of mines. I did a little bit of research on this, and apparently there's only 4 in the world that produce 1 million ounces a year or more, according to S&P Global. So this would put you in a very rarefied group of companies. And as you say, it's basically an extension of what you've already got there. It doesn't necessarily require a lot of capital, doesn't require breaking new ground in a new area. So where does this project sit within the company's list of priorities?
Well, this is absolutely top priority for us. And we're going ahead. We announced that we are going ahead with the first phase, which is to build the ramp to get us underground, to get more confidence in what we've got. This is an excellent project, but we're going to do it in a very disciplined manner. We're going to do it the right way and take the right steps to de-risk it and to spread the costs out over time. And you mentioned, Paul, and you're right, there are only 4 mines in the world right now that are in excess of 1 million ounces a year. But interestingly, 3 of those 4 mines are in tough jurisdictions: Russia, Indonesia, and Uzbekistan. And the other one, Nevada Gold Mines, is really actually 5 mines spread out over almost 200 miles. So this is really quite unique. This is 1 mine in Canada that's already built, that we're going to be expanding from about 700,000 ounces a year to over 1 million ounces a year.
Now, you mentioned you're about to start sort of phase 1 activities there with the ramp. What is going to be some of the sort of the key things that we can expect to see on the progress as you move towards the development of the underground mine and bringing that into production? And what's the potential timescale?
Well, it's 3 years to build this ramp and to take the underground bulk samples and to do some additional drilling. But again, very little risk. I don't want to oversimplify it, but I'll say it again. We build these ramps every day. This is what we do. There's very little surface infrastructure. We're quite confident in this. Again, very good return, but a very good risk-adjusted return.
Okay. Now, here at Kitco Mining, we get to speak to a lot of the juniors and junior developers in the Abitibi region. And I think there were more than a few tears shed this week with the announcement of this, as a lot of them, their business plan is basically hoping to be taken out by Agnico Eagle Mines at some point or other. And it seems with this development, any potential such thing is going to be much further into the future, if at all. Breaking a few hearts there, Ammar.
Well, we have a great relationship with a lot of the juniors. We really do try to be the partner of choice. We know these people well. We've been in the area for, as I mentioned, 67 years. And we take positions in juniors, and we try to learn what they're all about. But you are right. Look, I've been in this business for almost 25 years. I've never been with a company with as strong a pipeline as we have right now. So at Agnico Eagle, we are going to focus on a small handful of really good projects for the foreseeable future. Detour is number 1. Canadian Malartic. Canadian Malartic is one of the top 10 gold mines in the world, and it has fantastic potential as well. We're going to be talking about some other mines that we have in our backyard. So we have a fantastic pipeline in place. But to your question on the juniors, there's a lot of really good people out there with a lot of interesting things. We know them all. We want to be constructive with them as well.
Okay, I want to sort of talk about a more serious point, and it's related to the work you do with juniors and some of the things that involves. This week we saw there was a heap leach pad failure in Yukon territory, which it brought home a lot of the risks of the business for many people. But it also talks about the potential challenges a company like Agnico faces when it's thinking of buying smaller assets or smaller companies, assets that are already built. When you look at an asset, do you trust anything at all that the vendor says about the resource, the metallurgy, the technical aspects, or do you have to do a full revision using your own team so that what you're potentially looking at is as good as the vendor potentially says it is?
Well, I would say 2 things. So first, to answer your question, we always take a very, very careful look at everything. We build our own block models. We review all of their engineering. We do many site visits. Paul, when we invest quietly, and we might have a position for 5 or 6 years before we make a decision. And the logic there is we make a small investment so that we can get in and look under the hood. So that's number 1. We do extensive due diligence on everything we do. But the second item, and it's related, is we are, as we've talked about before, we don't consider ourselves a global gold miner that'll go anywhere in the world to build a project. We're a regional miner. We focus on regions that have geologic potential and political stability, and we focus on regions we know well. So it's not only that we do our due diligence, it's also that we know the regions well. We typically know the mine well. We know the permitting properly. We know the ground conditions. We know what the rules are. So we really have a pretty good idea. Accidents happen, but I can tell you, in our case, it would not be due to a lack of due diligence.
Okay, let's change track a little bit. Agnico Eagle has been performing much better than a lot of its peers over the recent quarters. And earlier this year, you overtook Barrick Gold in terms of market capitalization. What is Agnico doing better than its peers? What is it doing that your peers, your competitors, don't seem to be able to do?
Well, I don't want to talk too much about our peers. I mean, we know the people at all of these companies, and they work hard, and they're smart people, and they do, what's right for their shareholders. But we really do have simply I'm happy to talk about Agnico. At Agnico, we have a very simple strategy. It's a regional approach. We focus really on areas that we know well, that have geologic potential. And the reason we do that is because that's how, in our view, you become a good miner. If you assume everybody's equally smart, equally hardworking, then really what makes a good miner? What makes a good miner is, do you know the ground better? Do you know the suppliers better? Do you know the contractors? Are you the employee of choice? Are you welcome in the community? And we get that, being in Ontario and Quebec for over 60 years, being in Mexico and Finland for 20 years, being in Nunavut for almost 15 years. So I can speak for Agnico. We have a simple strategy. It's worked for over 60 years, which is focus on good regions and try to be the best in those regions.
Okay. Now, the end of this week, we end the second quarter, the June quarter. The gold price has been at $2,300 per ounce or above for most of the year. Not just speaking about Agnico, when do you think, in broader terms, investors are going to start seeing the benefits of this higher gold price, making a material difference to the gold equities?
Well, excellent question. I think it's going to be this quarter, and I'll tell you why. Gold price is up, but gold price has gone up before. And the problem we've had before, Paul, is that as the gold price went up and our owners were expecting a benefit, gold equity owners were expecting a benefit, what they often saw was costs go up. And so they didn't really capture that margin. And what you're going to see, what you saw with us in the first quarter, is we did capture that margin. Not only did we capture the margin, we explicitly said on our call in the first quarter that, look, as gold goes up, our owners deserve to get most of that benefit and not have to suffer with increased prices. So we were able to control our costs. And I think what you'll see in this quarter, and I think you're going to see it across the industry, I think the industry is going to do a good job controlling costs. I think the industry is going to make a lot of cash, and that will bring the investors in.
Oh, and let's hope so. Now, recent quarters, the message from a lot of CEOs has been about capital discipline, strengthening balance sheet, maintaining balance sheet. Now, potentially with this additional cash flow coming in, do you anticipate companies will start changing what their capital allocation strategies are? Will we start moving away from this capital discipline to perhaps more of a period of growth?
Well, the two are not mutually exclusive. Growth is fine as long as it's done in a responsible way with a focus on the bottom line. What you don't want to do is take the cash generated from higher gold prices and invest them in bad projects. So I think you will continue to see the capital discipline in place. I think companies are generating a lot more money. They're going to be doing share buybacks. They're going to be reducing debt. They're going to be strengthening their balance sheet. And in some cases, if they have good projects, they'll invest in projects. That's okay. What you don't want to do is invest in bad projects and spend money foolishly.
It does seem some companies favor paying dividends or increasing dividend payments and or buying back their shares rather than investing in their business. Does that perhaps suggest that some management teams have run out of ideas?
Well, I don't want to, talk about other management teams, but I think that we have our owners' money, and they ask us to invest it wisely. To the extent you have great projects to invest wisely, that's fine. But I think in this type of environment, you should always make sure that your shareholders benefit directly as well. So we'll leave it at that. But certainly, one of the factors is, have you got something good to invest the money in? And if you don't, it's better to give it back to your shareholders than it is to invest it in something that's not very good.
Okay, well, let's end on another high note. This quarter's ending, halfway through the year. What else can we expect to see from Agnico Eagle Mines this year?
I think the biggest message I would give you is we don't take this gold price for granted. And we are absolutely focused at $2,300 gold. We're just as focused on cost control and capital discipline as we were at $1,800 gold or $1,500 gold. So I think what you'll continue to see from Agnico is a laser focus on cost control and a very disciplined approach to investing capital.
Excellent. Well, I look forward to receiving your results in the coming weeks. Congratulations once again on the possibility of getting Detour up to 1 million ounces a year through the underground development. Ammar Al-Joundi, President and CEO, thank you very much for joining us today.
My pleasure. Thank you.
And I'm Paul Harris, and this is Kitco Mining.